Hello everybody, welcome to the fundamentals of technical analysis. This is just Lock Trades, and today we are going to dive deeper into the technical analysis, although still fundamental, but a deeper dimension of it. When I say deeper, when I expose you to this knowledge, it will seem simple, but it's the simple things that for me in technical analysis is very concrete. I want you to take out time to relax your mind and unlearn some of the things you've learned in the previous videos in the fundamentals of technical analysis and also in the foundation class, because everything is going to change as we dive deeper, because the aim of the fundamental class is to give you a structure into the in-depth technical analysis, because we know that in just locked trades without foundation a house can't stand. So the aim is to give you a solid structure before we enter into deeper dimensions of fundamental of technical analysis. So open your mind. If you are here for the first time, welcome. Please, if you're a beginner trader, we have a beginner series in a playlist. You can click in the description below and you enjoy what you see there and build your strong technical analysis framework. Before you come to this video, we have two playlists: fundamentals of forex trading and then the fundamentals of technical analysis. If you're here as well, please like, subscribe, share. It helps our algorithm as we debunk the mystery of trading. Let's get into the video. Now today we're going to be talking about accumulation and distribution. When I understood accumulation and distribution, I understood how, or I realized how simple trading forex was for the meek. Sometimes you meet traders and they take out time digging deep into the market. They have the technical know-how, they understand how the market flows. When you speak with them, they tell you a lot of things in the market. You put a chart in their front, they tell you a lot of things. They can even tell you what the trade will do in the next 2 years, or in the next, let me be meek with my conclusion, in the next 2 weeks. But when you ask them a simple question, why are you not trading it? Most of them don't reply. Because at the end of the day, if you know what the trade will do in the next 1 week, why not place a trade and enjoy the full profit of it? So at the end of the day, it is not embellishing what you've known or what you've learned, the terms in trading, that makes you a good trader. It's the ability to take a trade that makes you a good trader first, before every other thing, because it takes a lot of courage, and it's the simple things that matter, that give you the confidence to take trades. You know that in your previous class that you were taught market flow, and you were taught that there are three types of movements in the market, which is uptrend, downtrend, and then the range. You remember that uptrend is when the market is moving upwards, and you know that the downtrend is when the market is moving downwards, and you know that the range is when the market is trading sideways. Now that we are entering deeper into technical analysis, everything becomes much more simpler. So that brings us to accumulation and distribution. Come with me to the chart. Let's debunk accumulation and distribution. See you there. Hello everybody. Welcome to the office. So I want to define accumulation for you in the best way possible. Accumulation are areas where traders are looking to buy or to sell. And distribution points are where traders are looking to buy or to sell as well. Like for example, let me thunder through accumulation and distribution for you. There was an accumulation there was an accumulation in this zone, and those that accumulated here, that means those that bought, looked to distribute in this zone for a particular reason which we are not going into now. And then there was an accumulation phase there again that happened there that led to the distribution of the market downwards to this point. And also there was an accumulation in this zone here that led to a distribution here. There was an accumulation at the top that led to distribution. There was an accumulation below that led to this distribution. There was accumulation that led to this distribution. There was accumulation in this region that led to this distribution. And also there's an accumulation here that led to this distribution. Those are the two movements in Forex. So for advanced traders, especially when you are looking at this market, for example, what you should be looking at is areas of accumulation before you take your trade. So for example, let me just go a step ahead of the class. For example, if I wanted to trade this market and I wanted to trade it in a place where I know that at least a greater chance of making profits is there, I'll be looking for areas of accumulation to either buy or sell. And in this market now, where I'll be looking is at this area of accumulation. So you see how easily I have picked out a point where I might likely trade this market. There was another area of accumulation again that I just saw, which is here was an area of accumulation. Because after an accumulation comes distribution. After every accumulation comes distribution. So instead of you worrying about uptrend, downtrend, and trending sideways, which are important, but the major movement in Forex is accumulation and distribution, be it Forex, indices, cryptocurrency, your stock market, accumulation and distribution. If you were in this market, for example, and the market went up and retraced back, this was an area of accumulation. And now my point is, after this accumulation here, the market can choose to actually come down or go up, because I teach everybody that I've come in contact with that you don't know what the market will do, but you make an informed decision. I know this is a retracement, true, but what happened to this point? Why didn't it retrace and still go up? You see that it retraced here, accumulated, and distributes below. Why didn't it? The question I'm asking everybody in this class is, why didn't it go up? Some traders are going to be in this market and want it to go up, and they would have lost their money. And some traders will trade it below and they would have made money. So there is no hard and fast rule in Forex. We just have knowledge and guidance to how we want to take our trade. So accumulations are zones of potential buying or zones of potential selling. Those are the two movements in Forex. With that in mind, you can open up any Forex trading chart and immediately you're looking at a potential place to buy or to sell. So that's where technical analysis comes in. For example, let me give you an example. When you, my tool, come on, I'm in class. So like when, let's say you believe that this is a good zone or good accumulation zone for you to buy or sell, this market. So the beauty of technical analysis is your ability to now analyze this zone so that you pick your spot where you want to trade. There is a topic called targets in Forex or in trading generally. Target, which is a course on its own in Tesla trades. Now, this target helps you to be a disciplined trader. That when you have a target for your purchase or your sales, and you have a target for your profit as well. So that if the trade does not come to your target, you don't take a trade. That is discipline. These courses will be done in the future. There are a lot of courses that would come before them. But I'm just trying to let you know that there are only two movements in Forex. Wherever you see an upward movement and you saw a downward movement, that means before that move, like here, there's an accumulation. So since you saw this downward movement and then upward movement like this, that means that before then, there was an accumulation. I hope you guys understand. There was an accumulation here. This downward movement, there was an accumulation before the downward movement. And then there are micro and very small accumulations that happen in between, but I'm just showing you the extremes of these things. So you see the movement down here, there was an accumulation here before it moved down. So there was an accumulation here before it moved up to this place. So this helps you in a glance. You know what you want to do. Some traders, when they open the chart, they don't even know where to start. But listening to this video, I know that many advanced traders or intermediate traders as well will say, okay, because they know what I'm saying. Just looking at the market, you know your target. But the deeper dimensions of technical analysis will now help you go deep into that target to see whether you are at all going to make that decision to buy or sell. That is all for accumulation and distribution. So simple, but this took me a while to understand. I remember those days that I was learning how to trade. I'll just be looking at the market. I don't even know where to start. But I believe that this is a good start, especially for those still building their fundamentals and the beginners and those that really are just following this class and learning Forex from the scratch. This is a wonderful information. So the next topic that we are going to teach is either trends or support and resistance, or maybe one other course before we get there. But please stay tuned. We are going to debunk the way professional traders trade. Stay tuned in this channel. You have nothing to lose, but everything to gain. Thank you so much. Don't forget to like, share, and subscribe to this channel as well. And click on the notification bell so that whenever we release a new video, you'll be the first to know. I am excited to say see you in the next class, because the more we go in, the simpler it gets, but the deeper you get. Simplicity is strategy. Thank you.